Welcome a second time here in our show for the Fed meeting. It's my great pleasure to have your Fed meeting live commentary here on Wednesday, 26. I'm really happy to have you here in this show presented by Admirals. I'm Marcus, and I have my hosts, my moderators, the back. Thanks for your time in this evening too. Okay, so let's see what we can do. And I want to accompany you a little bit for the show or for the decision right now. And I'm looking forward to have all your questions here on YouTube. And thanks, Roman. And let's see. I share my screen right now. And as you know me, everything is calm and peaceful. So let me see the chat. Who is with me this afternoon? So Lukas, good evening. So give me here. And Hartmut, Tina, good morning, Karel. Okay, we saw this morning already. So go Umesh, evening, good morning, good evening. Oh my gosh. I'm in the office for 14 hours right now. That's really cool. So wonderful. Okay. So what we are going to learn tonight, that's a good idea. We want to learn how we can handle news in trading. And let's have a look on it because we are waiting for the rate decision. And of course, the countdown is running. And this is what we expect. We expect 94% that the Fed will keep the rate here. And yeah, so let's see what we can do here and just have a look at the chart. So actually, we have a look at the Dow Jones. And so give me a sec to... No, here we go. We can open Dow Jones. Here we have Dow Jones. And let's do it in 1 minute. Yeah, here we go. That's the reaction right now. And the rate remains as expected at 0.25%. And yes, feel free to ask whatever is your mind. We have around 45, 60 minutes time to talk about the ideas. And of course, here in the Dow Jones and about all the other trades. So let's see if we have any news here. Let me just make a reload here. And so come on. Okay, so that's cool. Let's see if we have any news here for the moment. So come on, let me log in here, please. Yeah, let's see. Okay, and welcome on YouTube also, guys. Oswald, wonderful, good morning. Juan, also good morning. Thanks for being here. I do my best to entertain you and to give you some valuable content. Me handling news is only the red high priority, new pending buy and pending sell straddling it. Okay, if you are successful with this, that's really, really cool. Okay, so let's see if we have any news here on Admirals, the account and premium analytics. This webinar is on YouTube also. Yes, you can see it afterwards. So here we go. Now, top news. So, okay, here we have the news. That's the top news. Actually, it will soon be appropriate to raise the Fed funds target. That's the market talk. So, and the Federal Reserve keeps Fed fund range unchanged, 0 to 0.25. Yeah. How can I manage trades with 0.01? It's you can manage it. It's no problem. So let's talk about it a little bit. So let's have a look at the chart, and you see that's just the first reaction. Yeah, it's always the same. It's just the first reaction. So let's see it here, and you see this is just news trading. Yeah. And what is really interesting is, and this is my experience about the last 23 years, sometimes most of the times, we have about news a breakout in direction of the trend. Yeah. And if you see how the trend is running, which is really, really interesting. So then the trend here in the sideways phase, and now the breakout in direction of the trend. And this is really, really cool. So is it, how should I say, is it a benefit or an advantage to trade the news? Yes, of course. If you can make it profitable and if you can make it, if you can back test it. Otherwise, it's just a kind of gambling. So it's fine. There is no right or false in trading. Of course not. You can do whatever you want because no one cares. Yeah, no one cares what you do with your money in trading. So therefore, you can, so like Oswald talked about or wrote on YouTube, yeah, you can make a kind of a straddle, yeah, just breakout up or breakout down. So two positions on the upper side and the lower side. So, and you can speculate on the breakout up. And if you see it's going in your direction, then you can make a profit, or you can trail your stop loss into the profit. And you see, and if you see it turns, then you can close the trade and you can open on the lower side. So actually in DAX, yeah, you see, we had a profitable trade. Yeah. Will you make transitions between currencies? What do you mean with transitions? You make correlation? No, I don't know. I don't know. I know the correlations in trading, yeah, but I don't care because I trade the trend in every single currency, by the way. Yeah. So let's quickly focus on DAX here a moment. You see it's the same reaction to the upper side. So my trade were stopped out. We got in here and we had 130 points profit. So, but the trend was broken. So therefore, and now we have a little bit rising prices. And here, now you see what happens. It's just the first reaction. Yeah. Yes, of course, we have enough time to look at every single currency this evening. Yeah, just to give a little bit time. So I will work on it. Charles, nice to see you again here on YouTube. Nice to have you here this evening. Okay, so as you can see, the first reaction, and you should know, in this case, especially news were published. This is a kind of algorithm trading, algo trading, because computer were programmed to read specific words in the news. Yeah. So, for example, a guy who has such an algo programmed his algo computer. If you hear or if you read in the news, a computer can read, yeah, can read the news, Fed kept unchanged, for example, then computer, please trade long. And this can a computer do in lightnings, yeah, in light seconds. We can never, as a human being, you can never trade in this way, never. So, and therefore, the first reaction is always based or caused by algos, yeah, because really, really huge traders are standing on the sideline. or they are engaged in higher time frames. Yeah, so they don't care about that. But most of the times they are on the sideline and they watch with a smile and winking, smiling and winking and say, okay, let's do the unexperienced traders their job. Let they burn their money in the market. Look what happened here now. And in a couple of minutes, in around about 20 minutes, we see the press conference of Mr. Powell. And then, yeah, we see what he was talking about. And then we see a next reaction. So this is the first reaction, that the Fed kept the rate unchanged between the corridor between 0.0 and 0.25. And this is the first reaction. So, and what happens? Literally nothing. So we have a break. It was a range, of course, 632 up to, yeah, around about 200, 150, 160 points. And now we are completely back. So, and now this is an experience. This is really interesting. How should you act on this? Yeah. This is kind of really stressful trading. Yeah. Of course, you can speculate on a break and you can make, for example, a kind of straddle. So like maybe you can make here an entry order and also maybe on the lower side also. So today, and believe me, I make this since 20 years and I saw hundreds of Fed decisions. And it's always after news price movement, the market price mostly returns to previous levels. Yeah, I have to make the same experience. Yeah. So, and you see, today it's a perfect breakout. But really bad, the bad thing is if you have in one candle move up, and down. And this is really bad because if you have an entry order on the short side and the lower side, yeah, so where will you put your stop loss? Yeah, okay, you can put it far away. This is a really bad thing. But today it was a very positive breakout because now you can handle it. Yeah, you can make a partial profit maybe here, for example, and then you can trail the stop, and then now you can trade to the lower side. But really bad is it, for example, and I saw this really often in the past, if you have this one, and this one, yeah, then you get in, get out, get in, get out, and you lose money completely. Yeah, absolutely. So today it's your lucky guy. What time frame do you work on the most? So me, just only 4 hours. 4 hours and daily chart. I trade for Admirals, the DAX in 10 minutes. Very profitable in DAX, 10 minutes, but all my trades, my private trading is just in 4 hours and in daily chart. And yes, the currency, the exotic currencies in weekly chart, but mostly in 4 hourly chart, as you can see here. All my trades are in profit. It's really lovely. We'll have a look on it a little bit later. So, but so why is it? I think most of the people are thinking they can make a lot of money in lower time frames. You can, but there is a statistic, and the statistic is really, really clear. 99%, okay, 98% of day traders around the world are not successful. So where is the cause? Why is it? It's not that they have the wrong strategy. It's not that they are not smart enough. There is a specific reason and a real cause. Because they misunderstand or have no clue or idea about the law of probability. And all my followers here at Admirals, guys, you know the law of probability. Yeah. Because if you don't take any signal and every signal which shows up based on your rules, then your result is a coincidence. And with this coincidence, you cannot become successful in trading. So therefore, Constantine. Can I say Constantine is a little bit easier? Constantine, it's a little bit easier for me. I have to follow the law of probability because I cannot miss a signal because I work with strategies and I work with probabilities, and probability means I have a mathematical calculation. Yeah. So now you see what happens. So how you can handle this situation about this, about what happened here right now. So today it's really easy because we see a kind of regular breakouts to the upper side. So you were able, when you see, okay, there's a kind of weakness in the market, it's just the first reaction. Then you can take money, for example, can trail the stop loss into profit and you're fine. And now maybe you can see, okay, that's a kind of straddle, for example, and now you can trade to the lower side in case, okay, there is now a trade or a trend to show us to the lower side. But you see, basically, like Oswald said here on YouTube, basically the price came back to the previous level. So, and you see, because they kept the rate unchanged. So basically there's nothing. And if you see the numbers, for example, so let's see if we have specific news here, for example. Okay, do we have any news for the moment? No, not really. Okay, just waiting for just a moment. Remo, give me a sec, then I come back to your answer. So here we go. Okay. Yeah, Federal Reserve leaves rates unchanged as expected. Yeah, and here we go. That's the full statement. And let's have just a quick look on it, on the full statement. If you see something there. Marianne, hi, nice to have you here. Okay, so we have something. So here we go. Fed releases separate note on the balance sheet, for example. So what do they say, for example? So the committee views changes in the target range for the federal funds rate as its primary means of adjusting the stance of monetary policy. So the committee will determine the timing and pace of reducing the size of the Federal Reserve's balance sheet so as to promote its maximum employment and price stability goals. Nothing new, that was well known before. So the committee expects that reducing the size of the Federal Reserve balance sheet will commence after the process of increasing target range for the federal funds rate has begun. So they also intend to reduce the Federal Reserve securities holdings over time in a predictable manner, primarily by adjusting the amounts reinvested of principal payments received from securities held in a system open market account. And over the time, the committee intends to maintain securities holding in amounts needed to implement monetary policy efficiently and effectively, and its ample reserve regime. In the longer run, the committee intends to hold primarily treasury securities in the SOME, thereby minimizing the effect of Federal Reserve holdings on the allocation of credit across sectors of the economy, and also is prepared to adjust any of the details of its approach to reducing the size of the balance sheet in light of economic and financial developments. And this is really interesting. They are prepared to adjust. And this is always interesting because the text shows it's nothing new. It's a kind of non-event. Yeah. And if you have a look on the chart, you see nothing happened, even in 1 minute. Yeah, even in 1 minute. Now we have we have kind of how to say it's a range of 805 and 460, around 340 pips points range. And I saw other different decisions. when we have ranges. And Oswald, I'm quite sure you know the same. In the past years of some Fed decisions, we have ranges of 1,000 points and 500-600 points of range when the market is going up and down. But now you can see it's we call it non-event. Everything is well known before, and there is nothing new, by the way, here. So let's see. Now it could be interesting what Mr. Powell was saying around about 10 minutes in the press conference, and what we can follow here. And here the news, for example, and this is the premium account of Admirals, by the way. And here you see interesting other topics. So here we go, tease up March. So this is here. Yeah. So let me see if we have market news here. Market news about Euro USD. Yeah. Let's see if there are any news. Here we go. That's interesting. Here we have a news. US economy continue to improve, but pandemic waiting on activity. Yeah, waiting on activity. Yeah, we see, if you can compare it with all the other things, then it's the same like in the last Fed decision. I guess the more important one will take place in March. Yeah, for me, a little bit more interesting was the Canada rate decision, because they kept also, but they say they have to increase the rate of the US Canadian dollar. This is interesting. This was a big impact today in the US dollar, Canadian dollar, because we see really huge impacts. We will have a look on it a little bit later. So you see, it's literally nothing. And if you have a look of, for example, the Euro USD right now, here we go. Here you have a huge, yeah. And this is, yeah, this is where you lose your money, because this is one of the reasons. And I made news trading in my past when I started with trading, because I thought I can make a lot of money with news trading. So this is how you should trade this. Yeah, if you have more things, you can break out here, but then it's 1 minute, for example. Yeah, it's 1 minute. You can make a breakout here, but then in the next minute, yeah, in the next 4 minutes, the price is going down. So how could you trade this? Okay, it's possible, for example, that maybe you see here that the price, that the breakout, it's a kind of fake breakout, and you see 3 candles in a row that the price is not going down, you can push the button for short. But at the same time, you have to sit in front of the screen that you see, okay, on the lower side, there is also no really breakout, it's a fake. So when you see, and therefore I prefer Heikinashi, because it's so easy when the color changed, and you know, okay, the trend is over, the movement is over. Yeah, and then you can make money if you push the button here and say, okay, that was my profit, and everything is fine. So, but for that, you have really convinced, you have to be strong for do this, and less people can do this. It's a kind of making money with news trading, of course. But now look at this one. It's exactly, the price is really awesome. So that was, yeah, 8 o'clock. You see, it's exactly the price like where we are right now. Yeah, exactly. Up and down, up and down. But in the first reaction, there was a possibility to make money. But to speculate on the break, it was really hard. I guess a better kind of news trading is when you can listen to the chart and then you can see, okay, it's a false breakout, and then push the button and speculate that the price is going down. Yeah. So in a look back, it's easy to paint it to draw it into the chart, but That's the point. You're living on the right side of the chart. But this is if you can read the chart a bit here in Euro USD. So, you know, I have an open position in Euro USD, but in 4-hourly chart, and here nothing happens because I sold already half my position and the trade is still running. We saw a little bit correction, but now this is a typical balance candle based on this news in 4-hourly chart, but actually nothing happens. So, and maybe if you have a look at the chart in hourly chart, in Euro USD, for example, yeah, then you see, it's a lovely downtrend also. Yeah, it's a beautiful downtrend. Oh my gosh, look at this one. It's really beautiful downtrend. Yeah, and yeah, let's see if the trend will continue to the lower side. We don't know. It's just a kind of prediction. Yeah, but we should not predict. We should not interpret. We should listen to the chart. And this is more important than anything else. Okay, so another point, you see nothing changed. We have to wait for the press conference. Maybe if Mr. Powell will talk something, then we see the next breakout. Let's have a look at gold. And I see a couple of questions here. Is order book from Remo. Remo, greetings to South Africa. Am I right? I guess you're South Africa, right? His order book is the same indicator as market profile or it's different? No, it's different. The basic, yeah, the cause of the market profile. Egypt, okay, sorry for that. Greetings to Egypt. The order book, of course, is the cause for the market profile, yeah, for example, because in the order book, you see the volume. For example, I can show you in my software, for example, where is it? So here, for example, now you see, it's a view of the DAX. And you see just here the order book and here the volume which is in, and you see and based on the volume, yeah, it's the market profile. Yeah, here, for example, based on here the market profile indicator, or here, as we can see, for example, here that's the market profile indicator. So, but it's the visible visible heritage of the order book. Yeah, it's not the same, it's different, but it's always cause and effect, you know. So the market profile is just the effect, what you can see in the order book volume. That's the point of the past, by the way. Okay, I saw news with the Fed growing. Yeah, let's see, we will see. Okay, so let's go to an interesting chart, and this is the gold price. And gold is also reacting. And you see, okay, so basically we can say the rate is responsible for the value of the special currency. Yeah. So for example, we are talking about the dollar. Yeah. Things as volume is typical for a central stock exchange, not good for FX and crypto, which are decentral. Yes. But by the way, there is a volume. Again, this is a kind of, there's a kind of big mistake. And I got this, and it's a very interesting question, what Oswald is talking here about. Things as volume is typical for stocks exchange, not good for FX and crypto, which is decentral. Basically, absolutely right. But there's a deep misunderstanding. There's just one thing. If you see stocks or commodities or indices or futures, yeah, there is an open order book. You can have a look on it, yeah, and you see the price and you see how many contracts. For example, so I give you an example. So you see that's the time and sales list. So exactly at this, no, that's not. Exactly at this price here, 15,462, at 7:24:23, one contract was sold, and there is one tick in the tick chart. So, and in every order book of stocks, futures, every product you can trade on the market except Forex, you can see and can have a look at the order book where you see exactly how many contracts, shares, futures, whatever were sold, at which time, at which price. The only difference to Forex is that you cannot see, and I will prove it to you, for example, that you cannot see how many lots were sold. But the system is exactly the same. There is an order book. It's, of course, it's true, it's decentral. Yeah, it's not a central order book like for DAX future, for example. It's decentral, exactly, because we have liquidity pools where banks are trading, we're trading to each other and together. But there must be a kind of order book because it's a marketplace, because it's a trade. And if you say trade, then we sell euro and we buy dollar. So there is a trade. And there must be a volume. Because without volume, you cannot sell or buy something. So it's unlogical to think so. It's pure logic that there must be a kind of order book. Even we cannot see the volume. How many contracts or lots were sold between. But you see, therefore, that's the tick chart here on the left side. And you see the last tick. Whenever it's moving, and you see whenever the figures are moving, then you see, okay, in this second, in this millisecond, something was sold between euro, or in this case, euro-Japanese yen. The only difference to a real order book is that you cannot see how much, but there is always volume, always, yeah? And that's the point. It's decentral, that's completely right, but there is, of course, a volume. To say it's stupid that in Forex is no volume is not logical, because there must be a volume. Without volume, you cannot buy or sell something. And to say there is no, because I don't see it, it's the same to say, oh, there is no fire. I see the smoke, but there cannot be fire. I don't see it. So, and this is what we have to think about it. So, this is why we can work in Forex with kind of market profile nevertheless, because the MetaTrader, for example, works with this kind of tick volume. Yeah. And this is what we see, for example, how does this indicator, for example, works whenever there is a tick. Yeah. It's like here. Whenever there is a sold, whenever something is sold, then there is a tick in the tick chart without the volume, because we don't know the volume in Forex. So therefore, this indicator, market profile indicator, works with tick volume. The more ticks, the more, not the more volume is there. It does not mean that you have the highest volume at the point of control. The price feels most comfortable there. So does not mean that there is the most volume. That's the difference to stocks, because there is the point of control. There is indeed the most volume. Yeah. And about the point of control, there's 70% of the rest of the volume. In Forex, we cannot see the volume. So, but there is the how should I say, the idea is the same. The cause is different, but the idea is the same. And I prove it to you every single day in the morning briefing show, when you see, and you cannot avoid that. You cannot be contrary to me, because I prove it every single day that even in Forex, the price, and by the way, we always trade prices, is always going back to the point of control, always. because there's just only one exception, you know. When they move the point of control, then it's not. But then you can see it with this kind of market profile. So like here, yeah, and you see it. And this is, what's the time difference? I'm in South Africa. Now it's around about 8:30 German time, by the way, yeah. The VWAP indicator uses in his trading, is this proprietary or downloadable? This is not the VWAP. This is developed by myself or by my special friend. It's market profile. It's not related to VWAP. It's different and it's not free of charge, but not that cost, not that much money, by the way. I don't want to make money with this. That's stupid. Okay, so you see, oh, gold is reacting on it. So basically we can say about the currency and the rate decision, yeah, a stronger rate is a good sign for the currency. So if you get a lot of money for the currency, then it's a good sign. So therefore, I guess it's not the best sign or the best use for the dollar that they say they will unchain, the rate is unchanged. So it's easy to understand. If you get high rate for your money, yeah, then you get a lot of rates for it. So, but if you get zero, why you should invest in dollar? But now, if you know, okay, Fed is playing with the thought that they will rise the rate, then you will invest today in the dollar, because you know, in a couple of months, you get something for your money. And this is why this rate decision is so important. Yeah. Send me an email, Juan. Send me einfach an email. You can go on my homepage or find me on YouTube, wherever you are. Send me an email, then I can give you the information. Okay, this is just here, not the part of here. Point of control. This is an interesting question. Unexperienced traders never heard about the point of control. And do you know why? This is really interesting. I love it. I really love it. So let's just have a look at press conference. If we have something, new. So the Forex market sees the dollar move lower and then back higher. So it's up and down volatility. Yeah, actually, yeah, we have to wait for the press conference a couple of minutes. So, and basically, it's always good for the currency when they rise the rate, because much rate, get money for your investment in dollar, by the way. So, but why is gold reacting on it? Why the commodities are reacting on gold, on this rate decision? Yeah, that's also easy to understand, because every commodity is paid by dollar and is calculated by dollar. So if you have a strong dollar, it's hard for the commodities to get money back, because they have to recalculate there about a stronger dollar. And it's a bad thing for commodities if they have to calculate it by a strong dollar. So therefore, the commodities, especially gold, silver, and so on, is always the opposite direction. So if you have a strong dollar, then the commodities are going down, are getting weaker, because they have to pay more. You understand? If you have a strong dollar, then you have to pay more. Then the commodities are going down. But if you have a weaker dollar or less rate, and you have to pay less for your dollar, then the commodities are going up, because they get more for the dollar, because the dollar is really less and is weaker. So therefore, the commodities are always in the contrary, in the opposite direction, like the dollar. So, and here you see the reaction on gold, for example. And yeah, let's open the chart in dollar again. Here we go. And let's see it in 1 minute. Here we go. 1 minute. Yeah. So here you can see it. Yeah. And you see it's here. It's gold and euro US dollar is always the opposite. Euro, gold and euro USD are working almost together. You see, now gold is going up and euro actually circling around here. It's very interesting to see this now. Now, oh my gosh, what is Mr. Powell talking about? What he is talking about? I cannot see it right now. So, but it seems it's not, seems it's better for the dollar. You see, euro is going down. Euro is going down actually, and dollar is getting stronger. Yeah. So, and you see, gold is going down to a bit. You see, stronger dollar, weaker gold. And you can see it on silver maybe. Let's see if we have the same in silver, for example. Yeah, it's not that much, but the traders are reacting on it, you see. What's about Bitcoin? Yeah, oh, up and down. I love it, by the way. Oh my gosh. Okay, so let's go. Where's gold? Where's my gold price? Here we go. Yes, you see, now you see the reaction on it. Okay, dollar is getting stronger. I guess Mr. Powell is talking about the press conference right now and is talking the dollar stronger right now. For the moment, it's just 1 minute. I don't know where the price is tomorrow, but this is for the moment. But you also can see now gold is going lower. Yeah, stronger dollar, weaker gold. Oh, and gold is actually going down. It's just 1 minute. It's not a crash, guys. It's not a crash. It's just 1 minute. Okay, so if you look at maybe on 1 hour, so yeah, you see the gold is falling down since a couple of hours, maybe since yesterday or this morning. Yeah, so therefore 1 minute is not the. Mr. Powell is the Harry Potter of trading, I guess so. Yeah, he is the Harry Potter. Oh my gosh. Okay. Guys, you know what? It's good for my Euro USD position. Oh my gosh. Yeah, it's working for me. Yeah, I love it. I really, really love it. That's really cool. Yeah. Oh my gosh. Yeah, it's really working. That's really cool. So I love it. I love it. So let's see if we have some news here actually. Oh, here we go. Okay, Mr. Powell, it's not possible to predict which, with much confidence, the path of policy. What a relieving news. Okay, that's really cool. I love it. So let's see what he's talking about. Improvement in labor market has been widespread and remarkable. Oh my gosh, improvement. So Fed fund rate is primary means of adjusting policy, not Fed funds. And it's not possible to predict with much confidence the path of policy. So I guess the point is, or the problem with this statement is that we have too many, how should I say, too many working places. We have Ukraine, this really bad news about Russia and USA. Then we have still the uncertainty of the pandemic. Yeah, actually we have Omicron. Who knows which variation will next come? No one knows. Yeah. So, and it's, for me, it's not surprising that he is saying such a thing. We cannot predict with much confidence the path of policy. So, and this is a kind of interesting. So let's see. And actually, oh my gosh, yeah, gold is going down. Actually, dollar is getting stronger. Yeah. So now the market is interpreting you know, and this is really interesting. The market is literally interpreting right now. And they say, okay, if they are not confident, so much confidence about the path, then the market thinks, okay, they can also rise the rate, maybe in March. And this means, okay, it's worth to invest in dollar. But also, you see, gold is going down because stronger dollar, weaker commodities. And here you can see this. So what's about the Dow Jones? Oh my gosh. Yeah, here you see the reaction. Yeah. Here you see the reaction. Okay. Oh, by the way, I have still a pending order short here. You see, in DAX, 10 minutes, I have still my pending order. Why is it? It's, guys, it's still the second trend arm in my short trend here. There was no break. Yeah. And I have to, this is my duty because I work with the second trend arm. So, and now maybe we see a trend continuation finally. I don't know yet because there was no breakout and actually there is no trend continuation, but I have to be prepared. There is no downtrend because the downtrend is broken. This is just only my one trend, the only single trend I can see on the right side. I have to do this. So, okay, we have much sellers on Dow Jones. This is really interesting. So do we have new other news here? Let's see. No, not really. Not really. But it's possible. Oh, by the way, I don't know. Quite a bit of room to raise the rates without hurting jobs. Okay. This is really interesting. Quite a bit of room. I love it so much. Yeah, you know what he's saying? Nothing. It's just blah, blah, blah. He also can say, okay, maybe tomorrow the sun is shining. It's amazing. Yeah. If you see the real cause beyond of this, then quite a bit of room to raise the rates without hurting jobs. And in relation to say it's not possible to predict with much confidence the path of policy. So this is literally what I used to say. They're talking a lot, but they say nothing. It's like the politicians, you know, they can do the same. They talk a lot, but they say nothing either way. Yeah. So point of control, second trend. Where can I get all this insight? I don't know about it. Yeah. Visit our morning briefing show. Anna, can you maybe the link maybe in the chat for the morning briefing show because someone is asking about it. And then you can learn a lot of things, by the way. Maybe we can do that. So, but it's kind of confusing. Do you open trades at 0.2, 0.3? Oh, of course, 0.2 all the time. Of course, 0.2, I open a trade. Why should I open a trade at 0.3? 0.3 is at the 0.3, the trend will break. A trend continuation is always at the 0.2. Yeah. So I hope I could solve your confusing Remo. Okay, so let's see. Dow Jones still, yeah, going down. Oh, you see what is interesting. Here you see this market profile. So here is so interesting. Look at this one. I love it. We were expensive price and we go back to the point of control. Yeah. So what's the real cause? And the real cause, guys, is what do we do in trading? What do we really do in trading? Thanks, Anna. Thanks you. Thank you very much. What do we do really in trading? Do we trade the product? Or do we trade candles? Or what do we trade? I show you. What do we really trade? You see? If you see literally nothing. Yeah. What we trade is the price. The price of every product. And the product is not written down in the order book. And every trading around the world, every product you ever can trade ends and starts in the order book. Why is this logical? It's easy. With your body senses, you hear news, you see the chart, and then you make a decision based at what you perceive, what you hear and what you see. Yeah, that's the only two body senses you use for trading: hearing news, listening, whatever there is. Yeah, that's all. So based on your perception, because what you see and hear is just your perception. It's not an ultimate way. It's not an ultimate thing. It's your perception. Based on your private, personal perception, you make a decision. What's your decision? Of course, you want to go long and short. What does it mean? What does it mean if you say, I want to go long and short? It means you want to buy something or you want to sell something. Okay, what can you sell or buy? Just the price. And what's the second point? Yeah, you put in some volume. How much lots, how much shares, how much stocks, how much futures, how many? One contract, two contracts, 0.2 lots, for example. So you put to your order the price where you want to buy something or sell something plus the volume. And both are going to the order book. If you can see it or not, doesn't matter. Yeah. It is in the order book, just there. And that's all. Here starts and here ends trading. That's all. That's everything what happens. Afterwards, what comes afterwards is just made by yourself. Because the job of the exchange, doesn't matter it's Forex or shares or exchange, whatever there is just to bring buyers and sellers together and to create a new price based on volume. There is nothing else, just numbers. Just numbers. That's all. That's really, really all. It's everything what you have to know. Afterwards, what you make with these numbers, no one cares. Really, no one cares. If you watch it like a tick chart, or maybe if you make lines. So for example, if you make here, for example, let's see, here we go. Just let me explain this here. For example, yeah, if you watch your chart with candles, yeah, or with a line, or with a bar, or whatever, no one cares, because the end of the start and the end is always the order book based on pure numbers. And there is no time frame, by the way. There is no time, because in the order book, there is no time. Time does not exist at all. So therefore, no one cares which time frame you use for your trading. No one cares. It's your perception. So which strategy you want to do, which strategy you want to trade, no one cares. Because in the order book, there are just numbers. Yeah. Fed is so boring. Yes, they talk a lot and nothing comes out, nothing serious. Exactly. They talk a lot, but say nothing. By the way, this is, so would you explain again, please, the 38 points rule, if I got it correctly? It's just a correction. Yeah. If I get into the market, yeah, I'm waiting for the correction. Yeah. So no more, no less. Because you have to understand, yeah, Time is an illusion. Exactly. Oh God, I love it. Someone is learning about my webinars, I guess. Oh my gosh, I love it. Really, really cool. And that's the bottom line. Of course, time is an illusion. So absolutely. So what we have to understand, ladies and gentlemen, is that in trading, we trade the price. So we trade always only the price. And what we have to understand, and this is a final conclusion for all of us, ladies and gentlemen, really, it's really interesting. We are traders. And this is different because as a human being, normally you are a consumer. Yeah. You go to the grocery. So like my Müllermilch, for example, I love it. I love it. So why do I buy this milk? Why? I love it. So I'm a consumer. Do I care for the price? No, not at all. Yeah, I buy my milk, even it's 99 cents in a special way, or if you have special offers, it costs 49 cents. But if it costs 99, I buy it also because I want it. I love it. So therefore, I'm a consumer. So therefore, I have a special relationship to my milk. That's a consumer. But ladies and gentlemen, in trading, you are not a consumer. You are a trader. So who makes money when I buy this milk? Who makes money? Yes, the owner of the grocery. He makes money. It's interesting, right? Because he is the trader. Does he care for me? Of course not. The market is open. I can come, I can buy. The moment I buy, the owner of the store makes the money. Why? He bought it cheap and selling it expensive to me. He makes money. I'm the consumer. Oh, I love it. I'm the consumer. And this is the big problem. That's a disaster if we think in a consumer thinking in trading, because then you start to have a relationship to your Dow Jones or DAX or trade. You have a relationship to your trade. How stupid is this? Yeah, it's numbers. Why you should have a relationship? And you don't check the price. So how make the owner of the shop money? With the price, he does not care about the product. I can also buy chocolate or apple or oranges or condoms or something else. He always makes money. He does not care about the product. He makes money when I buy anything. And in trading, it's the same. We have to think, ladies and gentlemen, as traders. Why you should have an emotional relationship to your trade. Why you should have this. It's just a trade. And how you can make money with trading. How you can make money with trading. Only one way. One. Just one. Buying cheap and selling expensive. Or in trading, you can sell expensive and buy it back cheap. That's the only way you can make money. Who cares about indicators? Who cares about support resist? No one cares. It does not exist in the order book. It's just your perception. And also what we can see today in the Fed decision. Yeah, let's see if we have a last news here. So Euro-USD cracks below a lower swing area and opens the door toward the next swing area. Thanks God, I'm short in Euro-USD. Thanks God, I'm short. Oh, that's really, really cool. Really cool. So US dollar and treasury yields jump as Powell takes a hawkish tone. That's really interesting. So you see, let's have a look on it. Gold is going down. Dow Jones is bit going down. And let's see Euro USD. Where is it? Where is my Euro? Here's my Euro USD. Yeah, of course. Here we go. It's going down. It's really going down. So I guess, guys, we get it. It was my first time, so I'm really sorry if it was not that kind of entertainment maybe you were expected about fundamental data, something like this. I'm a trader. It was my first time that I had the great honor and pleasure to moderate this Fed decision. I only can share what I know. I hope you learned a little bit about trading and my approach of trading, and we had a bit of how should I say, information, and I hope you could a little bit value. You have a little bit value for your own trading, and I hope we see each other tomorrow in the morning briefing show or in the other webinars here on Admirals. By the way, we can see here on the Forex webinar, and here next one. What's the next one? Webinars here on Admiral Markets is the next one tomorrow morning, the morning briefing show. I am looking forward to see you there if you're awake, by the way, because it's late, damn it. So here we go. Yes, trading professionally with moving averages. It's on Friday. And next week, basics on how to successfully scalp the order book. And every morning we have the live morning briefing show with myself. Ladies and gentlemen, thanks a lot for having patience with me and mercy with me. It was my first time to do this. I thank you to Admirals that I can do this. Really thank you. And now, guys, I wish you a lovely evening. Really lovely evening. And I hope we see each other tomorrow or another place, wherever you are. I wish you all the best. And as always, have courage and be kind. And may the force of the rules be with you.